this webinar. For those who do not know me, I am Antonio Barros, Product Manager in charge of the ESG offer for the CACEIS Group. You joined us today to discuss the subject of ESG, which is a very broad subject which directly or indirectly affects all aspects of society, including, of course, securities lending activity. We wanted to organize this webinar because there is a debate right now, for which we have a lot of discussions with our clients and our market counterparties. This is the question of the compatibility of securities lending with the principles of sustainable investment. This question generated a lot of discussion and reflection for us, and like many banks active in this area, we want to respond in the most appropriate way possible and adapt our offer accordingly. And for this, we want to share with you all those all those who are interested on this topic, the current positions and the consensus around the ESG, and also the debates that are still ongoing. To do this, I'm joined by two experts in this subject at CACEIS who are connected to this webinar and who will also intervene during this presentation. First, we have Sikko van Katwijk, member of the executive committee of the CACEIS Group and CEO of CACEIS Amsterdam. Sikko is also sponsor of all CSR initiatives within the company. We also welcome Remy Ferraretto, sales manager for the Securities Lending and Repo activity at CACEIS. So what are the topics we want to cover today? First, we will begin with a reminder with a reminder of the major current challenges raised by the subject of responsible investment and the positioning of CACEIS from a CSR point of view. We will then get to the heart of the matter with a summary of the debates and consensus around securities lending towards this big challenge that ESG represents for this type of activity. And finally, this will lead us to present the tools that CACEIS makes available to its clients wanting to continue or start a new securities lending activity. After that, we will end this webinar with a Q&A session where you can ask your questions through the dedicated chat on the WebEx application provided for this purpose. So what are the main challenges of the sustainable finance? For some time now, we have noticed a growing interest in ESG topics and responsible or sustainable investments. In general, this is not something new. We have been hearing all about responsible investing and ESG for a few years now. However, as you have been able to observe, this dynamic has clearly accelerated over the last 1 or 2 years to become the essential topic of the moment. So before getting to the heart of the matter regarding the ESG challenges surrounding the securities lending activity, let us quickly come back to the rise of the ESG standards and the foundations of sustainability finance. So what are the key drivers for sustainable finance growth? There are several reasons for the rise of the sustainable investments. We have identified 3 types of causes that are at the origin of this very strong trend, causes that could also be considered as major challenges for financial market players. First of all, we observe that investor expectations are changing very quickly and that ESG standards have become essential in investment decisions and are increasingly integrated by the investors into their selection criteria for financial products, in the same way as traditional financial performance criteria. This trend has only accelerated over the past year, and we see specialized newspapers as well as general media regularly publishing studies on this topic, which demonstrates this sharp increase in investor expectations. Obviously, this new expectation of investors goes hand in hand with the need to have access to reliable information based on comparable criteria, which allow them to choose products in which they trust, in order to allow them to navigate through terminology which is sometimes complex and varies across a large number of investment vehicles, many initiatives have emerged in order to normalize and standardize the various ESG assessment criteria. Among the various initiatives, there are notably the ESG labels. We can underline the fact that France was a pioneer in this area with the creation of 2 government labels in 2015 and 2016. The SRI label, which has a more generalistic scope, and the Greenfield label, more oriented towards green funds. And examples of initiatives at European level include Lux Flag and its various variations in Luxembourg, and we have also the FNG label in Germany, or the Nordic Swan Eco label for the Nordic countries. Regarding the labels, it's important to specify that the criteria allowing funds to be labeled are specific to each of the labels. It is therefore important to pay attention to it according to the ESG criteria, which are decisive for the choice of the investor. The main interest of these ESG labels is to explain the ESG criteria in a simple and more accessible format than the regulations put forward. The rise of green finance is also explained by the risks and the opportunities linked to the sustainability criteria of the financial investments. The concepts of risks associated with the sustainability aspects of an investment are quite easy to understand. In terms of ESG risk, we can, for example, mention the reputational risk if a financial product or an entity invests in controversial activities such as tobacco, palm oil, weapons, and others, or activities that have a negative impact on the environment. We can also talk about climate risk, whether it is a direct physical risk or the risk of transition linked to climate issues. Risk that can have a huge negative impact on the financial performance of the investment if these risks materialize. Beyond the risks, sustainable finance also represents real opportunities and benefits for the investors. On the one hand, ESG investments are on average more diversified than funds without ESG characteristics, and therefore less risky. On the other hand, we were able to observe an outperformance of this category of investments in 2020. Performance of between 2.5 and 3.5 on average, depending on the categories of investment vehicles. And finally, the last pillar at the origin of this rise of sustainable finance, which is undoubtedly one of the most important challenges for the sector, concerns the large number of new regulations on the subject, and more particularly at the European level. One of the most impactful regulations in this area is obviously the SFDR regulation, which sets rules on the categorization of financial products in relation to the ESG criteria and the information to be disclosed in financial reports or on the websites of the management companies. We can also talk about taxonomy, which sets a very strict framework on the criteria to be applied in order to be able to consider an investment as sustainable, or the CSRD directive, which modifies the NFRD directive regarding the modalities, the ways that companies must apply to publish their non-financial data. Data that will then be used by the financial sector to measure the non-financial performance of their investments. Without going to a laborious analysis of this text, the common objectives of these regulations are quite clear. The main objective is to globally orient capital flows towards more sustainable investments, and this by allowing the investors to have a real transparency on the environmental and social impacts of their financial investments by means of standardized, redefined, and comparable criteria, and at the same time fight against greenwashing. And the whole difficulty of implementing this regulation lies here in interpreting the many existing rules and methodologies in order to measure the levels of sustainability of an investment in relation to ESG criteria. So what are the main ESG criteria used by the sustainable finance? We are not going to begin an exercise of exhaustive definition of non-financial criteria. First of all, because there are hundreds of them, too many to be able to go through them during this session. These multiple sustainability criteria can, however, be categorized into 3 or even 4 pillars. We obviously find the 3 categories which correspond to the letters ESG, or environment, social and governance. But it is also increasingly common to find a specific category linked to climate, given the level of urgency of climate issues in the public debate. You will find in this table some examples of non-financial criteria taken into account in the investment process. Obviously, this list is not exhaustive. On the environment, we can, for example, talk about the existence of an internal policy for waste management within the investment company, the impact of the economic activity of the company on biodiversity, or the level of environmental risk of an investment. At the social level, there is first of all the respect for workers' rights and more generally for human rights by the invested company, which seems fairly obvious. But there is also the promotion of social dialogue, diversity, employee training policy, and the inclusion of people with disabilities. On the governance part, we have the classic criteria of independence of the board of directors, transparency in the executive compensation policy, and gender parity within the board, and other criteria related to governance. On the climate, we have criteria that are currently attracting a lot of attention. The major one is the calculation of the carbon footprint. It is split into scope 1, 2, and 3 according to the international standards. It's easy to understand here that environmental and climatic criteria are closely linked. All these non-financial criteria aim to measure the level of sustainability of an investment. It's important to note, however, that this sustainability is measured according to a principle that is increasingly found in regulation, which is the principle of double materiality. The double materiality implies that for an economic activity or an investment to be considered as sustainable, it must be demonstrated on the basis of ESG criteria that this investment has a positive impact on one or another environmental or social factor, while demonstrating at the same time that it has no negative impact on all the other ESG criteria. With all of this, we can easily imagine how much potential for complexity there can be behind this exercise. This exercise of measuring the level of sustainability of investments against this ESG criteria is a difficult exercise for multiple financial players, and more particularly for investment products. And it will certainly become one of the main challenges in the financial sector for the next few years. This sustainability assessment is also an exercise that CACEIS has undertaken to carry out as part of its CSR policy, not necessarily as an investor, but more generally as a company active in the area of asset servicing. And that's what my colleague Sikko will now present to you.
Yes, thank you, Antonio, and welcome to all of you. I think we're all positively contributing to CSR criteria already by doing this web-based seminar. I think we tick some boxes in the social, climate, and carbon area by not traveling and meeting each other in physical form. So in that sense, I like to use that as a first step to introduce myself. I will only keep it brief. I know you're here for looking at the securities lending impact on ESG. So just a brief word from me, Sikko from Katwijk, as mentioned already by Antiono. I'm the responsible officer within CACEIS for the CSR policy within the firm. Just a quick introduction. As you may know, we obviously are part of the Crédit Agricole group. And at Crédit Agricole, as a corporate, we have a mindset to do better. And as we also always tell ourselves by our motto, we work in the interest of our clients and society. And this is something which has a sort of broad scope. If you look at what we currently do with that in action modus at CACEIS, we have a CSR direction where we want to involve as many people as we can. And so if you look at the CSR policy of a firm like CACEIS, we can look at ourselves, at our own company's initiatives. We can look at our clients and how to help them. And we can obviously, which is the base, look at regulations where we need to adapt our policies. This is just an overview of the translation we've done into our policy. But what I like to cover with you is our approach within the firm. How we see ourselves as a CSR-based firm, as a green firm, if you like, a sustainable firm. We want to involve a community of people, a network of our employees. So to avoid a tick-in-the-box mentality, where we only look at what we need to do from a regulatory perspective. We look at more, we want to help, we want to do better. Although there are some issues left to deal with, like Antonio already mentioned, like the taxonomy, and when is something called green, when you can label it green. Banks have a lot to do with money laundering and whitewashing, and we now also need to be careful of greenwashing, so all sorts of colors involved nowadays. I think if you look at our initiatives ongoing within CACEIS, I like to mention a few. One is that we are actually starting sustainability centers, physical centers in our branches. We will have a new head office next year in the summer in Paris, where we will also start this sustainability center. And it's meant as a place for sustainable activities for teams to focus on their CSR personal involvement. And because, as I mentioned, I think it's the group, the crowd that needs to influence here. It's a matter we all are involved in, we all feel relevant with, so we should all contribute. So I think in our company, we not only contribute by helping our clients, and this is what this seminar is about, but we help our clients in the sustainability, the CSR environment, ESG, by launching products to help them to monitor their business, to measure the greenness of their business, to alert them on investments in their business, to do data provision. We have all sorts of initiatives. And today, I think it's very important that we explain some of our activities in the particular area of securities lending too. So thank you for your attendance today. I think it's great to have topics like this on the table in very practical, product-driven terms. So I wish you a very good seminar, and hopefully with this, we all contribute to more CSR emphasis within all our companies. I really would promote that. Thank you, Antonio.
Thank you, Sikko. So now I give the hand to Remy, that will continue the presentation on the challenges around ESG related to the securities lending activity.
Yes, thank you very much, Antonio. So, hello everyone. So, yes, as now we have replaced the debate with all the discussions and all the topics that Antonio and Sikko was spoken just before. We can now focus on the securities lending. And in the next sections, we will see the initiatives, the debates, and also the consensus that are currently for securities lending. So if we go to the next slide, we can see that there are debates about securities lending, and the question is very easy. Actually, can we do securities lending and be ESG compliant. There is no real consensus on this, but as we can see, the debate is much above the securities lending industry only, because there are discussions between many participants. First of all, there is the Market Association, ISLA, International Securities Lending Association, who is looking into many discussions. The regulators, ESMA, AMF, CSF, and all other regulators who are doing roundtables to have discussions with all the participants and the investors. The investors themselves, they are building very dedicated teams and doing workshops to build some strategies and rating agencies and labels they are giving the maximum visibility to the investors to make their decisions. So what is the answer? The answer is showing a very positive consensus. This is not definitive, but the consensus is definitely positive. But it remains positive under a few provisions anyway. The first one is about the systems. Your systems must be robust enough to manage all the reports and all the positions that you have on lending. Also, you have to consider that there is an impact on the revenue, because the more restriction will be on the positions, the more impact you will have on the revenues. And then the principle of double materiality that Antiono explained a bit earlier, which is that even beneficial the ESG strategies are, they cannot disrupt the markets with a lack of liquidity. So there is a real common objective, and everyone is seeking for harmonization of these criteria in order to get a real trend. Now we are talking about the debates. We can go to the next slide and see the main pillars. Yes, Antonio, yes, touch. So we can see the 5 main pillars. So this is a trend. This is not definitive, but we have identified for you the main pillars for securities lending and ESG. The first one, which is quite self-evident, is the transparency and ethics. So your asset servicer, your custodian, is well equipped for transparency to provide you all the reports you need and all the activity reports that from the operation that are made on the portfolios. And the ethics is very important as well, because there should not be a negative impact on the liquidity of the markets, and also your servicer must be online with the investment strategy and investment principles of the client. The second main pillar is the selection of the service providers. Your service provider must have an ESG policy. This is very important to be in line with this policy. The third pillar is the selection of the borrower. The borrowers that will borrow the securities from your portfolios must be selected with regard of very strong selection and very relevant criteria. The fourth pillar is the selection of the collateral, because when you lend securities, most of the time you receive collateral and guarantee. As an investor, you can decide what collateral you want to receive and what collateral you don't want to receive, because it is not in your investment policy. As an example, tobacco companies, if you don't invest in tobacco companies, you can restrict the tobacco companies for collection. And then the last but not the least, the voting rights is the fifth pillar. And it is very important to understand that when you lend securities, you don't have the right of vote because this is the borrower who is holding the stocks at the time of the corporate meeting who has the right to vote. So many investors have already set up a few restrictions. It can be a standard restriction of, for example, 20% of their holdings on all stocks because they wish to participate to all the corporate meetings, or they can select only sensitive corporate meetings where they will restrict a few names to make sure that they will use their full position to vote at the general assemblies. So many debates are currently in discussion with these pillars and around these pillars, and this is important that all the participants are the dedicated teams, and the challenge is to manage all these pillars in the ESG investments. We can go to the next section now, because now we have talked about the debates and the pillars. We will see what are the tools. So the next slide is showing you the CACEIS offer with all the tools that you can have access to, and all the tools that CACEIS is providing to his client. We can go to the next slide. Thank you very much. The CSR policy, the corporate and social responsibility, is the first topic. So this is what Sikko just explained a bit earlier. So I will not come back on it. The second main tool is the full transparency of the chain. So as service provider, we are able to provide full activity report to give you all the information that what is happening on your inventory when your stocks are lent, but also the performance report to see what how is managed the portfolio and how is efficient the lending compared to the industry. We also have a model of liquidity versus risk to monitor the liquidity. To give you an example, the securities lending market as of end of June 2021 was about roughly 28 trillion euros of assets lendable, where 2.6 trillion euros were unknown. So this is a very large market, very liquid. Then we have a selection of the borrower. This is very important to select your borrower with strong criteria, and the DNA of the Credit Agricole Group is to select all the borrowers with qualitative criteria. The selection of the collateral is really important because this is where the client can decide to restrict the securities to his collateral. But you must bear in mind that the system, the only limit is the system. When you have only a few ISINs to restrict, this is quite easy, but if you have thousands and thousands of ISINs to restrict, you must have the system adapted to the large volumes. And then the recalling the stocks. So we consider that, as we mentioned before, when you lend stocks, you you don't have the right to vote at the corporate meetings. So the investors are, as we mentioned before, set up some strategies to some restrictions to lock their positions partially or fully. Fully, this is not what we recommend to fully lock the position. This is not up to us to give an advice. Of course, it depends on the investor strategy, but we always have to bear in mind that this is really important to avoid market disruptions with in case of a lack of liquidity, because if tomorrow every shareholder decide to remove their stocks from the available inventories, there will be a very big lack of liquidity. So all these tools are set up in order to reply to the client expectations and to give the maximum satisfaction to the clients in a securities lending program. Because we have, as a large asset servicer, we have a very different typology of clients, like UCITS regulated funds, but also institutionals who are as demanding and have requirements as the UCITS regulated funds, and we also have pension funds. So we are able to provide satisfaction. We can go to the next slide. So to conclude this section, CACEIS is able to provide three main principles in the securities finance service. The first one is the flexibility. Flexibility is very important to give all the tailor-made solutions to the client, because the requirements can be very different depending on the clients. Then you have the simplicity and the safety, all the setup and all the tools that your asset servicer is that CACEIS is able to provide are very important to give to the client all the comfort the client need to lend their securities. And then the expertise. The expertise is one of the very important thing that we have in CACEIS, and you have seen with the discussions from Sikko and Antiono just before, that we have departments dedicated to this expertise and participating at the market debates. So CACEIS is really able to provide the full transparency to this activity and to ensure that the market remain quite liquid, with always the satisfaction of the client on the lending rules, lending restrictions, but providing the revenues, because the revenues of securities lending are very important for many clients who consider that this is now performance, which is important to consider in the global performance of their portfolio. So now we have talked about these main principles. I think we can go to the questions. So we'll have a look at my chat on the screen. So what trend do you observe in the proportion of ESG investments among the assets under custody? CACEIS. Antonio, can you take this question, maybe, please?
Yes. This is a question that is quite difficult to answer, but in particular because there are not yet fixed and common criteria that we could easily apply systematically to all the assets that are deposited with us by our clients. As we have seen in the slides, ESG criteria are multiple and more or less relevant depending on the type of assets and the data to evaluate some types of assets are not always available. However, we do have some indication on the trend that has caught our attention recently, which is related to the funds with an Article 8 or Article 9 classification according to the SFDR regulation. As a reminder, Article 8 or 9 are those which Article 8 or Article 9 funds or products are those that declare in their investment policy in their prospectus to have ESG characteristics or sustainability objective. This is a requirement in force in Europe since March this year. We currently observe a proportion of 15 to 20% of funds that are currently classified in these two categories, Article 8 and Article 9, which is quite a significant proportion and which demonstrates a real wish to appear as a sustainable management company. And in general, we observe some management companies which tend to classify a large part of their fund range in Article 8 or 9. There are many large management companies and more particularly large French management companies that have classified their funds as ESG or sustainable products, while other management companies, especially small and medium-sized management companies or asset owners, are a little more on a wait-and-see approach, given the effort that these ESG categorizations involve from an assessment and reporting point of view.
Okay, thank you, Antonio. Next question. What are the impacts of the new ESG regulation on the asset servicing activity? Antonio, can I leave you this question?
Yes, I can take it, no problem. Yes, at first sight, I would say that sustainable finance regulations like SFDR or taxonomy have little direct impact on asset services, either in their obligation as custodian bank or as a fund administrator. These regulations are primarily intended for investment and asset management activities. But having said that, given our role in the investment chain, we certainly have a role to play in this area. The fact that the assets are in custody, deposited and valued with us, puts us in a position to offer value-added services to support our clients in the ESG assessment of their assets and in their reporting obligations. As such, we have developed an ESG and climate reporting service that has existed at CACEIS since 2018, and which allows our clients to assess their asset portfolios according to specific ESG indicators. And we are currently developing our ESG offer to also integrate the new indicators and new reporting requirements resulting from the SFDR regulation, such as the principal adverse impact indicators and the taxonomy alignment ratios. So the main impacts on asset services, I would say that it's mainly to define new ways and new services to help and assist our clients to comply and deploy their ESG strategy.
Okay, Thank you, Antonio. So let's go to the next question. According to you, are we going towards a normalization of ESG criteria for securities lending? I will answer this one. As mentioned a bit earlier, well, today there is no final, even if there is a positive, there is no final consensus determined yet. But actually, the more we will continue speaking on this topic, and the more it will be clear for all the participants, and I believe that the more we will get a final consensus. What is definitely required, we believe, is that the securities lending remain an activity compatible with the ESG criteria. And this is important that all the investors let their assets continue to let their assets available, because we have seen that it could make a very strong market disruption, and market disruption are not good for everyone. So this is a very big topic with occurring a very large discussions, and we definitely believe that we will get a final consensus for securities lending. So I see that we are close to the end of this webinar. If we go to the next slide, Antonio, please, just to give you the contacts. You have Dan Compin, he runs the front office securities lending team in CACEIS. Donia Rugeb, so she runs the sales team in the front office in Dan's team. And I'm a senior seller in charge of securities financing and repo. I work with Donia. So we will be really delighted to share your point of view going forward on this topic. So please feel free to contact us. I just take the opportunity of this webinar to invite you to the next webinar that will be organized by CACEIS. And please save the date for the 8th of October. So this webinar will be in French. It will be also how to facilitate the distribution of your funds cross-border. So it will be hosted by Joseph Saliba, as the Deputy CEO of CACEIS, and Istanbul, who is Managing Partner of Fund Global. So please save the date. Thank you very much. We are on time. Thank you very much for your attention. Thank you very much for attending to this webinar. We will be delighted and we look forward to discussing with you again on this topic. So we remain at your disposal. Thank you again, and thanks very much to Shivani, who helped us to prepare this webinar. Thank you. Bye-bye.
Thank you, everyone. Bye-bye.